both CPI, PPI, core, non-core, and most importantly, unemployment claims came in line or below the expectations. And in today's video, I'm gonna explain what that shift means for the market. And it's a very important one since that can point the Goldilocks scenario from now onwards. Stay tuned. Good morning, guys and gals. My name is Ross. Today is Friday, and this is our macro update here on Data Dash. First of all, let's quickly jump into the forex calendar and see how the unemployment claims that came out just recently, yesterday, were significantly below both previous and forecasted value. But also what gives a nice direction for the market is, of course, the month-on-month and year-on-year CPI that came both either in line or even slightly below the forecasted value. Same can apply to PPI. And now, if I'm gonna go to my macro model, it is very interesting. First of all, I pointed out that market has changed to Goldilocks. That means strong economy, low inflation. In isolation, that's the best combination of two main economic driving factors to the market. And so yesterday we had even lower jobless claims. So while everyone was all bothered about non-farm payrolls recently, I continue to focus on jobless claims. And if you see my videos for the last month or two, you remember why I explained it multiple times, why the jobless claims are the most important driver for me in this point of bifurcation, in this point of dichotomy of where the market would go and which direction it would take. On non-farm payroll is what the market cares about, but I care much more about the jobless claim, and I see that as a much more impactful indicator for the medium term. It is actually a very nice indicator because it gives you time to decide as nobody reacts and gives you pretty real-time thinking compared to others where drive a lot of volatility into the market in a short-term momentum. So the market does not use it for whatever reason, which makes it even nicer. You have an edge here, you have a competitive advantage, which is always a good thing. And market-wise, it definitely can give us the scenario that I've been indicating here a month ago, where we would have an ability to take those flat candles here at around 560 on S&P 500, this S&P 500 chart, and then we might have actually the turmoil towards the election, towards the November, and then emergency measure for Fed to step in. That's not going to be as beneficial for the tech market as it's beneficial for commodities and our silver position. However, this scenario is still potentially in play. I do not profess to catch highs and lows. I love to catch trends, as I mentioned multiple times. Of course, there's nice reversals, and we're gonna go in towards the mid of the video today and see what can be really the DCL or the local bottoms within the couple of my favorite fundamental stocks. So yes, sometimes I am interested to accumulate when it's a good fundamental value. I just don't see S&P 500 as a good fundamental value in here. What's so interesting as well is that pretty much until mid-September, we do not have other numbers that would significantly affect the market. And that means that for now, towards the end of the month and the beginning first week of September, gives us almost 3 weeks of a breather. Well, we're gonna have seasonal, actional, directional, and fundamental. All those moves are gonna be lined up, in my opinion. And when it comes to Federal Reserve, it's also important to point out that for almost next 25 days, the market, in my opinion, would stay where it is right now, in that state where on one hand, market believed Fed would cut. I don't think they would actually cut 50 basis points or 0.5% in one shot, but that doesn't matter for now. Market is still very convinced Fed is gonna do the cut, and CPI is coming lower. That was like the main fear, you remember, something that we discussed several times. So based on those two, it gives us this bullish momentum, and for me, it is actually important that jobless claims do not spike up. If the jobless claims do not spike up, I personally don't even care that much if Fed is gonna cut or not. It's actually might be even better that they don't. I just don't think that's possible. I think 25 basis points is kind of programmed, is on the table based on other European central banks' actions. But even assuming Fed does not do the cut and the jobless claims stay low, that's a Goldilocks scenario. I'm fine with that. That's just gonna kick the can down the road and postpone the time for the turmoil, when the yields would then invert, when this whole rotation would start from stocks to bonds and so on. So it gives us a good breather for the next 20 months. I'm actually quite bullish. So in today's video, we're going to go into the charts and see what does that mean for stocks, for crypto. So please be focused today. And the first sector that is catching my attention here is the lithium producers. For those who've been in our Telegram group, you know that I've been pointing out Albemarle together as Piedmont Lithium and SQM, the Chilean Sociedad Química, are at a very good point. First of all, I'm here on the monthly chart. We are holding this trend line, but if I'm just going on the daily here, you would understand the moment we have right now and the place where we are after such a severe drop. We are basically starting to print multiple divergences. You can see on the chart just on that yesterday daily engulfing candle that has been appearing here, we have printed 7 divergences, not just MACD, RSI and money flow index, but also a couple more just to confirm our bias that this can be the intermediate cycle low. As you can see, there was this downtrend, might be catching some movement aligned to this one. I also want to point out for those who have been not encountering this stock in the past that first of all, Albemarle in this very most shorted S&P 500 stock based on the July data. As you can see, we have more than 12.3% current short interest, and here we are obviously not speaking about a small company, we are speaking about a multi-billion-dollar company. And as soon as I mentioned this is an S&P 500 company, it's also going to benefit from the inflows within the S&P 500 ETF directly. Moreover, if we gonna look here on visual stocks, you understand the company is right now trading at very low 1.25 price to sales ratio. Of course, be careful because it still can be seen much improvement on the net income side, but overall I guess you can start adding here as I have done. We might have one more drop opportunity when we're gonna swipe that low, and in this case I will be waiting for us, of course, to accept first of all above that monthly trend line that we've been following very closely for the last, I would say, 20 years, 24 years. So in this case, that would sign like an alarm to me, and I would exit my position if we close below this current daily candle that we are forming. But also looking at pre-market, looking how confidently we closed yesterday with this engulfing candle, my intuition is telling me that first of all, we're gonna first recover that gap that we have created during that crush that we had 2 weeks ago. So that's at least 28% from here, just to come back to where we were a couple of weeks ago. And the same applies, of course, to Piedmont Lithium. It's due to the exposure to Africa. I think that's a slightly a riskier play, but once again, just to recover to the technical values where we were just recently as of March and April. We are still already talking about 90% of that stock, just to come back to that range where we were. And for those people who are watching me for a little bit already, you understand very often I look at the charts through the PO3 lens and I see accumulation, manipulation and distribution. It does not mean that this company is going to be the future of lithium production, but it simply means that from the technical perspective, market makers are able to build their long position and also liquidate the shorts, the comfortable shorts that have been here, just technical shorts that have been shorting the bounce from the 50 exponential day moving averages every time here and here and here. It will be quite lucrative for them to take all those highs here, even if there is no future for that company and it's going to get lower. We're always looking for the technical opportunities, and that's why we combine both technical and fundamental knowledge in order to conclude our decision. SQM, if you remember, I also mentioned this company because first of all, it is already looking much stronger. It's trying to close above this order block that has been forming. It's also, I like this company particularly because the cost of production is a Chilean company. Been to their facilities myself when I've been to Chile, and I remember that the cost of production that they have is significantly lower than for most of other competing companies, and that also means that I see less risk here suffering from a potential drop in the lithium demand. Company would easier survive just purely from its balance sheet perspective, all the headwinds that it can face price-wise, demand-wise. Moreover, in my opinion, despite this is a tech stock, many people who follow me in the Telegram group, you guys know that this is one of my favorite plays when it comes to tech. I've been waiting for PayPal to accept above $68 for a while, and it looks like despite all these recent drops, all this issues that we had in the market in the last couple of weeks, when you remember the volatility index weeks has reached 60, which was the third highest in the history. Of course, we dropped, and then we quickly reclaimed our upper range bound. Of course, it's a little bit early to say. We might need maybe another bounce down to 63. I think 63 will get front, maybe 65. And then we might have another attempt to actually accept. And if you remember my price targets for PayPal, for those who does not, let's have a quick look. As indicated in the Telegram group, actually PayPal is the stock I observe a lot. We've been noticing here the accumulation, of course, from also institutional investors. You remember Paul Tudor Jones, as mentioned, been acquiring nearly 1 million shares of PayPal at 64. Jim Simmons, famous Jim Simmons from Renaissance Technologies, also has increased his stake in PayPal, adding 2.1 million shares, roughly at around 64 value. So both guys are in profit right now. Institutional ownership has been increasing. We are expecting the profit target, or TP1 take profit target at PayPal at around $76, TP2 at 96. So that's roughly gonna give us 15 and around 40% move. That's not so bad, assuming that in my opinion this chart is clearly pointing us a reversal. I'm not even being very pushy here, expecting us to recover all this fair value gap that we've created on the down move all the way from 300. So I'm not speaking about 200-300% price targets. I will be quite happy to actually take profit roughly at around 100. So PayPal, for those who've been missing it, please don't forget that in our Telegram group, it's completely free for the Data Dash newsletter subscribers. So we're talking here about less than $1 a day, so maybe something like $30 a month. I think that's one of the highest values on internet in terms of newsletter. And for the newsletter subscribers, I'm doing everything, all the observations or the signals completely for free. So I put a link in the description down below. Feel free to subscribe. I am really doing my best to democratize financial knowledge. I think it's an amazing opportunity, but you decide. If you don't want, it's also fine. You see my updates on YouTube a little bit later, sometimes a week later, sometimes 3-4 days later. Might be a little bit less available towards the end of August because I'm gonna be traveling. I will be in California, around San Francisco area, so I might be a little bit less actually up to date with the YouTube videos, but I still will provide my updates for the Telegram group. All right, coming back to the charts. I cannot forget about, of course, silver miners, junior silver miners, SILG to silver ratio. Despite, you remember, I'm not a fan of that particular ETF, but look at this beautiful hammer candle that is actually finally trying to break from our multi-week, or I would actually say multi-year consolidation. This on the weekly chart. You remember how hard this resistance is for us. It has been already 4th time we are trying to break through it. But if I gonna look on the daily, of course market is not yet open, but I see how quickly we recovered that drop that we had, severe drop of course a couple of weeks ago, last Monday. And looking right now, let me quickly clean the chart. So you basically see that we are consecutively making the attempts to reprice silver junior miners versus silver itself. And this is why also our SLG chart has been bullish for the last couple of weeks, despite silver has not been doing much. So it's super important that we just don't accept into that lower range. But even if we do, as I said, 24 is my absolute lowest target for silver. If that happens, I will be very happy. I will add another 7-digit number in here. I will go all in into silver at this point. If it's not given, that's also fine. I'm quite allocated. We might have a bit of a chop here, but what really gives me a huge confidence, when this is the reason why I've been actually pointing you out, you're probably at the best point in the history to invest in silver, is because of this gold to silver ratio that has spiked all the way up to almost $88. And then right now, I guess the repricing into silver all the way down, as I said, to 48 or even 40 would start. And for me, this is an incredible opportunity for the gold money to start flowing into silver. Let's have this quick look. I've been indicating for the Telegram subscribers of how silver supply and demand would unfold, and in my opinion, this is definitely once in a lifetime opportunity, with total supply shrinking and demand is significantly growing here. We're gonna start seeing the repricing of silver all the way towards 40, 38, $46, like that range, I would say. That's why silver didn't even start moving, but we already see the bounce on our junior miners at about 30%, with those beautiful 10% daily candles, just as a matter of time when those things would accelerate. I'm not going to go through all the charts today, but if you see, for example, Aftermath Silver, AAG is one of the stocks I really love. I see at least 300-400% from here, just to come back to the zones where we were, with slightly more lucrative silver prices and slightly lower cost of production. Of course, now electricity, labor costs have increased, and that's suppressing our miner stocks quite a bit. But I would say with silver at $38-40, that would be not a problem at all, and Mr. Market would do its repricing. And before we jump into the crypto charts, one of the things I really want to emphasize here is that one of the biggest advantages as a trader with a good experience and good track record is an ability to understand when to trade and when to sit on your hands, and how big your trade positions should be. Are we in an easy period? Are we in a hard period? Are we in a ranging market? Are we in a trending market? Right now, the market conditions are hard, especially in crypto. So please, whatever I'm gonna tell today, you don't need to over leverage. You don't need to overshoot in terms of position sizing either, even if you're dealing with it primarily on spot. So that's an important reminder. On the other hand, I think this market is actually a scalper paradise because it provides a lot of very nice intraday moves. Just to give you an idea, one of the simplest strategies, I think I briefly mentioned it in one of the videos, but something that you all can do, you go to Spaceman BTC key level here. It's a free indicator. It's available on TradingView. It's already preset. It is going to provide you the Monday ranges. So we've been here on Monday on Bitcoin. We formed the Monday high, Monday low, we formed the Monday high. And then what is happening right now, you can see that we basically has swiped the liquidity above this high in that zone, and then we swiped the liquidity below that high and accepted back into the range. So my normal positioning here, if I just want to trade intraday or intra-week, I would take that long into Monday high. It's not a very crazy long, but it's still a 2-to-1 risk reward, which is very good. And what it allows me to do is to enter on acceptance into the Monday low, target TP1 Monday mid, target TP2 Monday high. Very simple, but you all guys can do that. And with that said, we're gonna have way more education once I'm back from California. We're gonna start a specially dedicated group when I'm gonna provide once a week trading tutorial and real practical example. Right now, you can of course scale into that trade, especially if stock market open provides us a little dip. I still think it is valid to add into Bitcoin a little bit around here and unload towards 61,000. But I'm actually seeing even better trade. Even better trade would be in this case Solana. Solana, in my opinion, let's cleanse the chart. Actually, we don't really need to trade Monday range on Solana. In my opinion, if we just look on in the last week on the chart, we can see clearly the PO3 here. we have this accumulation, and we had, let's maybe highlight this in red, we had the zone of manipulation where market maker clearly wanted to give us an idea that we're gonna go much lower. So a lot of shorts have scaled into Solana within that range, and right now we are actually accepting back into our point of accumulation. So I see maybe putting this rectangle in green, I'm seeing an opportunity here to target those fresh highs or fair value gaps. That's, of course, we are talking about fair value gaps on 1 hour, but nevertheless, those two zones are giving us very nice risk reward. Let's quickly measure it, what we're talking about here. I think you can place your stop loss slightly at around 140, maybe 130.5, because 140 is an even number, and very often a lot of people gonna put their stop losses, so be also smart on that. So a lot of people are a little bit lazy, they don't want to type 139.5, they're gonna type 140, and for the market maker it will be a great way to trigger those stop losses. So not saying you to of course go crazy on those, but be mindful about it, keep it in mind. Risk reward ratio can here go all the way to 4-1, and guys, we are not talking about like a crazy move back to all-time high. We're just talking about intra-week liquidity grab, and more of those alerts I'm gladly providing in our Telegram group. If you see, I think I quite improved in the last 2 weeks. We've been scalping Bitcoin back and forth within those ranges, as you can see, for a period of a few weeks. So I guess if you're still considering joining the group or not, I'm pretty sure you would recap your subscription cost with half a trade, not even one trade. But yeah, I'm doing the best I can. So please check it out. With that said, I also wanted to share with you, if you want to trade alts, in my opinion, as I said, people very often ask me, where should I do that? And what happens with the USDT trading? Binance is not allowing it. I fully moved, guys, to Bybit. The reason for those is I can trade spot, and I can allocate take profit and stop loss according to our plan, as we've been just discussing that. So if I want to put, for example, at 139 stop loss, that is very easy to be done, and my take profit, let's say 160, and then I open up $100,000 trade here at the level of 142. So one click and the trade is here, it's already submitted, and that's the huge advantage I can bring to most of other exchanges, where you need actually to wait to allocate your stop loss or your take profit, and sometimes you can only allocate one at a time as a limit order, and then you constantly need to move it. Here you can do it way before your trade is at all filled. We have a special partnership with Bybit right now, and if you subscribe with the link down below, you get 500 USDT trade for free. And please keep in mind, USDC spot trading is out of commissions too. That's what I mostly do. I also, of course, trade derivatives. And as I said, yeah, that future trade 500 USDT, all you need to do is to deposit 100 USD. And let me know in the comments down below if you actually take Solana trade, how did it go for you? With all that said, guys, next week I'm gonna be back. One important update as well. I will be speaking at the Deepin Revolution Summit, which is an event taking place 23rd, 24th of August. In my opinion, that will be a great opportunity to familiarize ourselves with what actually happens into the world of blockchain. In my opinion, the end of this year, when the Fed is gonna pivot, the months of September, October, November are gonna be very lucrative for altcoins. I want to see what are the cool projects happening in the industry, connect more to founders, investors, developers, and I invite you all also to join. We secured together with Nick a special partnerships together with the guys. So normally the ticket for today's event is around $197. If you apply here the Data Dash special discount code, you get 50% off. In my opinion, just at around 85 or 90 euro, $98. It's a good value for today to see all the speakers sharing their alpha around the new projects they build. And let me know also in the comment section down below if you're gonna attend. My slot is at 23rd of August, slightly above around 9 p.m. London time or GMT Lisbon time, where I am based. With all that said, guys, I wish you an amazing end of the week. Touch the grass, don't overtrade over the weekend. Let's see how the next week is gonna fold for us. I still think we're gonna have this bullish momentum. We're gonna capitalize on that in our Telegram group, and I see you all next week. Much love and bye.